Hello YouTubers and welcome to my channel. This is the Prince of Forex. Click that like button if you like this video and subscribe to stay updated. Today I'm talking about NAS 100. NAS 100 is like a reflection of S&P 500. What do I mean? I mean they look alike. You see the resemblance? So if you're trading NAS 100, it's as if you're trading US 10, US S&P 500. It's almost the same. So that's it. So let's just stick to NAS 100. I like the name NAS. Sound like NAS. Okay, the NAS. When you want to trade the stock, you have to know what the central banks are planning to do, so you can create an idea. Good. This is 2024, so I will just talk on present day and let the past be. 2024, we have been hearing things like the central bank wants to cut interest rate, and that's good for the stock because the stock likes it when the interest rate is being cut. What does this mean? And NAS 100 comprises of 100 companies. I think it's technology. Those companies will have the ability to borrow more money. Nice. If the interest rate is high, companies can go out and borrow. It's scary to borrow at a higher cost and pay higher interest rate. No one likes that. So if NAS sees that interest rate, or companies, the 100 companies, sees that interest rate is going to be cut, they're going to rally. They're going to be happy. And if finally the expectation comes to pass, whereby the interest rate is being cut, it will be rally. The rally will happen more. I want to speak rubbish like bad now. The rally will rally more. That's nice. The rally will rally more. So the market will just be going up and up and up. And in 2014, the United States is planning to cut interest rate. Now, if the inflation target, get the key point, inflation target, the Fed uses inflation target to know if they should cut or not. Now the stock market and investors watch this inflation target, if it's getting close or not. If the inflation target is getting close to its target, like 2%, which is 2% that they agreed, they'll start rallying, they'll start rejoicing. Investors will be happy. The economy is nice, the plan is going well, they'll rally. So you should know the plan of central banks before you buy any stock in any economy, not only Nasdaq, in any economy. So today we're talking about Nasdaq. So let's go deep into what's happening. Now, the fundamental data that are coming out are telling us that yes, inflation is coming down. Inflation was at 5 and it was coming down 4, came down 3, and now we are at 3.3, around there. So to be rallying. And when this period is occurring, companies will do well. And again, for the Fed or the central banks to cut interest rate, they want to make sure that things are slowing down. Economy is cooling off. Example, GDP should be coming down. You get the point? Unemployment should increase. So when people don't have work, when they are jobless, they don't have money to spend, no money to shanko, no money to flex, inflation will come down, which is their target. They want inflation to come down. Now when people don't have jobs, companies are now spending more money, they are sacking people, economy is cooling off. The Fed or the central banks are happy, and they'll be saying on the news that yes, our target has been achieved and blah blah blah, we're going to be cutting interest rate. At that moment, investors will keep buying the stock. And at any point, which is, I'm giving an example, at any point, if the data that comes out is opposite of what the Fed wants, the market will fall. there will be a little fall until when the data comes back in place. So what I'm trying to say is that during times when interest rate and Fed up, central banks are trying to cut the interest rate, you should be buying. You should be buying. When the Fed are trying to cut interest rate, you should be buying, not selling. Now let me give you an instance when you should sell. Let's go down to the daily time frame and you see it. Now we are this consolidation. Let me draw a trend line for you so you can see it properly. We are at this point. I'll draw this from here. And the market bounced. At this point, at this zone, there was a news saying that yes, two countries were at war. I think it was the Israel and Gaza, so I don't know. During that point, the stock market fell. The stock market hates war. Investors will take away their money when they hear things like war. These investors are trading billions, and when they hear things like war, they are scared to lose their money. Some of this money is being borrowed though. They borrow the money in billions. So when they hear things like war, they take away their money from the stock, because they know that these countries are kind of having businesses to do with these other countries like United States, Israel. I think they have some business transaction to do with United States also. So I'm not really sure if my news data is correct, but during war period is the time you should be selling. At this moment, when this consultation was happening, that's when the war news came out. It was around here. So around there the war news came out. The war news started happening around there. That was a moment whereby as a trader you should look for where to sell. And this was the best point to sell. At the break of this place. At the break of this neckline here was the best time to sell. You could have sold here if you're planning to sell the stock market and exit when you hear cooling off of the war. That would be the best time to sell. So that's it. Try your best to follow the news, and when you hear things like war or COVID-19 or geopolitical events, that's when you should look for a best place to sell. Don't just sell, look for best place to sell. Then when the cooling off happens, bam, you're going. Another example for selling off that happened historically was 2002, maybe 2000, something like that. 2000, here. COVID-19. This is the money time frame. COVID-19. Yeah, that was the best time to sell. If you are following the news, you should just look for price action. You see? Look for price action and sell. If you go to the daily now, you see all that trend lines happening inside here. Now you can sell. But always listen to what the Fed, the central bank is saying, and you know what to do. So now let's go back to the daily and know what the current thing is happening. To the upside. And on this day, the data that came out was saying that the US manufacturing industry is still booming. That means things are happening, which is not what the Fed wants. The Fed wants everything to cool off. At this day, manufacturing industry and private sector showed some form of improvement. Investors remove their money day one and almost day two, but it's cooling off. If a new event comes in that says that the economy is cooling down, then we might see a rally from this minor support here up. But if the data that comes out now says that the economy is still booming, we're gonna move down to the next support, which is here. So it all boils down to data. the economic data is the